So today we have updated housing crash predictions for 2023 and beyond. And these are predictions from the big players in our industry. Not guys like me, I'm just a little fish in the ocean, but we're talking the big players. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, you know what? As the housing market turns, every other day stuff's happening. It's always interesting. Randy Patrick here, putting the realism back in real estate. Today is what? December the 7th. Time flies when you're having fun. All right, let's get into it right now, guys. So once again, our friends at Fortune.com had a nice article here about 20% home price decline. 7 forecast models are leading crash. Here's where the other 13 models have the 2023 housing market going. So what this really is kind of a quick synopsis from all the big players in the industry, getting their take as to where the housing market's headed, or at least where they think or where their predictions are. And we're going to go through that right now. So let's get into it. So basically, we've heard a little bit of discussion over the past few months. So obviously, as I always say, from the start of the year, when nobody could ever contemplate what was happening, with mortgage rates going up and home prices falling and the market slowing down, et cetera, et cetera. So, as I said, we started off with double-digit appreciation goals, from January 2022 moving forward. Now we're looking at the reverse with respect to double-digit depreciation, home values declining going into next year. So basically, I guess you could say the roll of the dice is how much we're going to decline. This little hypothetical drop here has the Case-Shiller, data, and you can see that first sort of arrow at the top is if we have a 10% peak to trough drop in home prices, will be down a little bit, and then the next line is where a 20% is. You can compare that to the hump that's kind of, towards the left. That was the peak of 2006. So you can see 10, 20%, we're still going to be about 20, 25% greater in home price values than we were compared to 2006. All right, but could it go lower? Your guess is good as mine, and you know what I think. So I'm actually going to go through a bunch of these, we'll call it these organizations or groups that are kind of chiming in as to what they think is going to happen. We'll kind of summarize at the end. So clearly the first one is Realtor.com. The economics team at Realtor.com predicts that the median price of existing homes will rise 5.4% in 2023. Well, does this come as a surprise? No, it doesn't. Really, if you take a look at, what is Realtor.com? Well, they are essentially a national organization representing about 1.6 million plus real estate agents who call themselves realtors across the board. So, of course, groups like this typically are going to, hedge or be on the safer side and not say, oh, we're going to have a housing crash, it's all going to bust, right? That would hurt their base, clearly, and hurt the economy. So this doesn't surprise me where we see, this group saying, yeah, we're going to have, a rise, not a double-digit rise, but a moderate rise of 5.4%. Now, CoreLogic chimes in. The firm predicts that the U.S. home prices will rise 4.1% between October 2022 and November. It should probably be 2023. Basically, they have their risk assessment of the nation's largest housing markets that I talked about the other day. Again, CoreLogic, what do? Well, they're a data company. They're integrated into various MLSs. They're integrated in all sorts of data products and services. They work on mortgage lending, et cetera, et cetera. So do they have a vested interest in the success or the continuation of mortgages and sales and values going up? Of course they do. So again, they're at 4.1%, but I want to temper that. It's not double digit. It's the people that are saying we're going to have increases are down about we're talking at the 5 and lower. Home.LLC, the firm predicts U.S. home prices to rise 4% in 2023. The Mortgage Bankers Association, so the MBA, the firm expects U.S. home prices to rise 0.07% in 2023, followed by a 0.1% decline in 2024. So that basically is just going above the staying the same line. Not much risk in discussing what's happening here. In the Mortgage Bankers Association, obviously, is what pro mortgage origination. That would make sense. So they're basically saying that the market is going to pretty much remain the same as where it is now for the next year. Simple as that. So a slight increase for next year. So there, that's where we are. And Zillow, of course, you would be silly if you didn't think Zillow would expect an increase in price point. Home values to rise 0.8%. between October of this year and October of next year. So again, they're not saying huge increase. As a matter of fact, they're anything under 1% to me when you factor in pluses or minuses for data and change factors, whatever. It basically is it's going to remain the same. So they don't see the market moving up or moving down. Again, a company like Zillow, who's taken a heck of a beating on their stock price and on their balance sheet with respect to their iBuying model, they're just laying low and they're saying, here's where we're at. The market's going to be the same. I'm sure they're probably not trying to pontificate too much as to where the market goes for obvious reasons. So that's your group essentially that's actually for or stating we're going to have an increase in price points next year. And folks, if you like the information I provide, if you could smash that subscribe button, I really appreciate that. And for those of you who aren't or who are subscribers, could you please reaffirm your subscription? Because I've been losing a lot of subscribers the past couple of days. So thanks very much, and we'll move on. So that was really about 5 groups that are saying we're going to increase in the new year. So here is the other side, people who are saying that, or groups that are saying, organizations that we're going to have a decrease. So Freddie Mac, the firm's forecast model, has prices falling 0.2%, which is not much. Fannie Mae, they're looking at 1.5% in 2023 and 1.4% in 2024. So these are sort of government-sponsored entities. They're GSEs. They're saying, yeah, we're going to have subtle home price depreciation. So there you go on that. Redfin, baseline forecast 4% in 2023. We expect new listings to continue to decline through most of next year. Again, keeping historic lows, preventing prices from plummeting. So they're banking on the fact that we're going to see just marginal decrease because we're still going to have a supply issue with respect to housing. That'll remain to be seen. Amherst, the real estate investment firm, which owns a massive portfolio of single-family homes, says they're looking at about 5% between now and 2025. It's about a 3-year space. That's virtually, if you factor that in over 3 years, we're talking like what, a little bit like 1.67% over each year. So a 5% over 3 years to me is not much of a decline whatsoever, but still they're looking for a decline. Wells Fargo, home prices falling 5.5%. So basically saying home prices shot the highest are now vulnerable to a disproportionate swing to the downside. All right, so that's what they're looking at, the Mountain West area, of course. So Wells Fargo says 5.5% in 2023. Capital Economics, the firm's forecast model, has U.S. home prices falling 8%. Guess what? Goldman Sachs, so now we're getting to some of the bigger financial houses on Wall Street. The investment bank expects U.S. home prices to decline between 5 and 10% peak to trough. Their official forecasting model predicting 7.6%. Again, but these guys are always saying it could be more based on other factors in the future. So there you go. Next, who do we have here? Let me go to the next slide, guys. All right, ING, peak to trough. The firm tells Fortune that expects U.S. home prices to fall between 5 and 10%. However, a multinational bank says it's possible that U.S. home prices could decline up to 20%. So we all know that the 20% seems to kind of be the crash number. So we're calling it a crash if we're at the 20% level. Moody's Analytics. So again, I'm a big fan of Moody's. Firm expects a peak to trough U.S. home price decline of 10%. However, if a recession were to manifest, they'd look between 15 to 20%. Now, they've said that statement, if a recession were to manifest, for the past 3 or 4 months. So, I'm not an economist. I'm just a layperson here. But again, if you start looking at the financial models and read a lot of stuff about what's going on in our economy, one would maybe seem to get the impression that we're in a recession already or we're about to truly enter one. Again, affordability has evaporated with housing demand. They've also in their, these guys are the most, aggressive with putting out their information. And they have mentioned that some locations, like the higher end ones that have gained huge amounts, they're looking at 20, 25, 30% decline in some of these markets. So they've been pretty bullish on declines, bearish on losing, I guess you could say, in the marketplace. Morgan Stanley, recently they came out with a home prices to fall around 10%, June 2022, the bottom of 2024. If mortgage rates fall by more than expected, the peak to trough decline comes in closer to 5%. If a deep recession manifests, we're looking at home prices could crash 20%, including a home price decline of 8% in 2023 alone. So they're saying from June 2022 to bottom in 2024. That's what they're saying. So people are now saying that the bottom will hit us faster than previously thought of as well too. Zonda Home, peak to trough, the real estate analytics firm, tells Fortune that its forecast model sees U.S. home prices falling 15%, a little more bullish or bearish there. KPMG, one of the big four accounting firms, is talking at least 15%, so that's interesting as well. Zelman & Associates, the boutique research firm, forecast that U.S. home prices would fall 4% in 2023, another 5% in 2024. However, the founder of the firm says we could see a 20% peak to trough decline as well. So again, these numbers are not carved in stone. They're kind of like what we've seen the past few months is like this rolling but increasing potential value decline as time goes on. So the more information we get, the more we see the market changing and evolving and sort of going down a little bit and starting to pick up steam. You can see that everybody has said 4 or 5%, whatever, but we can also see a much larger amount if things kind of get out of hand. Right, so essentially, recession, other things as well too. So there's a lot of things that I don't even talk about here. I don't really get into the deep recession things or jobs or wages or whatever. But all these things that you read are contributing to where things are at in the marketplace right now. Pantheon Macroeconomics, the firm expects U.S. housing prices to fall by around 20%, which seems to make sense. And finally, John Burns Real Estate Consulting. I talked about those a couple of videos ago. Peak to trough, the real estate research firm's revised forecast has U.S. home prices falling 20 to 22%. That forecast is based on the assumption that mortgage rates stay relatively close to 6% through 2023. Just reading some stuff on the Federal Reserve and what they're doing, they're not backing off. Maybe December's rate increase will be 50 basis points, but there's no sign of them slowing future increases to the rate structure anytime soon. And as a matter of fact, they're still stating that we have to get a handle on inflation. And as I said 1 or 2 videos ago, that the Fed has come out saying, we're not in the housing bubble anymore. The bubble's popped. It's burst. We're now in correction mode. So that's interesting to see where all these guys are at. So when you take a look at it, there was about 20 groups that were kind of polled here, or they just, I guess they interviewed, questioned, whatever. 5 of the 20 state the housing market will increase. And as in summary, we can see that the increases are really 5.4 was, I think, the highest number here. So any increase that could happen in 2023 will be marginal at best, comparatively speaking, when we've actually gone up about 40+% over the past 2 years. 15 state that the market will decrease. That's basically a 75% of this group says it'll decrease. That's the majority says it will decrease. Now, obviously, when you take a look at value of decreasing, we've got 0.1%, 1.2%, all the way to single digits, to low teens, double digits, to 20 to 22% from John Burns Consulting. And as I mentioned, we do have specific locations where Moody's has said, well, depending on where you're located, like maybe a western city that's had huge appreciation, like in Austin in Texas or Boise, Idaho, we expect those could be 30-35% when all said and done. So there is some variation here, but I think when you take a look at this, what can you take away from this discussion is the fact that the majority of the people, and I mean the groups, organizations, seem to believe that we're going to see a decrease, and a lot of them are sort of saying we're in correction mode now for sure. Funny, the 5 that state the housing market will increase tend to have reasons why they're not going to say it will decrease. They're I think more in protective mode and trying to, I guess you could say, create that narrative where it's going to support their income, their member base, their client base, things like that. So that's why I don't really take the first 5 into that deep of consideration. They think it's going to increase, but again, their increase is relatively low. All right, no more double-digit appreciation from those top 5. So we fall back into where things are at right now. I mentioned the other day, last video, about we have these situations now, and this, I'm sure this was polled or they got their information prior to what came out the other day. If you recall my last video, if you haven't seen it, go check it out. But the last video, I focused on some of the situations that we've already seen, basically manifest and occur in 2022. And what the main issue was, people who purchased a property in 2022 are already underwater. There's a certain component, about 270,000 people who, or homes or mortgagees, homeowners that purchased this year alone. So they bought this year, they're already underwater. So that means within the course of 6 months, or again, from January, you bought January, February, March, or wherever you bought, to where we are. Here we are in the fall, winter time now approaching. You've actually lost. You're underwater. You've lost market share because it's gone down that much. So you paid a premium to play in the real estate game, and already not even within the first year of your home ownership, you're actually underwater. So if you were to sell your home today, you'd actually have to bring cash to pay the difference between what a fair market value offer would be versus what your loan mortgage payoff would be. That's the definition of underwater. You're totally underwater. The house can't solve its own problem. So that's just face value, let alone if you put the home up for sale on the MLS, where you're paying real estate commissions. Any normal real estate transaction will have specific closing costs that both sides will pay, but there will be seller designated closing costs as well too. So if you think about it, if you're already underwater, you're going to get worse off if you sell, because you're going to have to bring money, plus you're going to have all these extra costs to close if you're trying to get out of the property. Simple as that. So that's the unique thing about where we're at. And to make it even worse, we've got something called early default payment. So we've got a lot of loans now who within the first 6 months are already defaulting. They're not paying. The largest segment of that, like there's about 8% of the loans out there that's happening to. The larger segment of that is the FHA and VA-backed loans. So again, those have lower qualification to get in. Therefore, we see, inversely proportional is lower qualification, but then higher early default rate. Simple as that. So that's what's going on in the marketplace. So this little give you a little litmus as to what's happening out there, where things are at, where the perspective is. Personally, I think we're going to be above the 30% nationally across the board. Remember, our peak to trough, which was from 2006 to 2012, almost a full 6 years, we lost 27.4% across the board. So what we're seeing now is we're seeing that could rival the last housing crash. It could be more. I think it's personally going to be more. But that peak to trough is actually going to be a lot more compressed. It's not going to be a 5.5 or 6 year peak to trough. We're probably going to see it play out in 2 to 3 years. So, but what do we say? Buckle up, strap yourself in. It's going to be a heck of a ride. It's going to be a lot of fun, so get ready and get involved here. This is funny, too. An economist says a U.S. housing recession's already arrived. So regardless whether you believe we're in a full-blown recession, economists are saying a U.S. housing recession has arrived. The housing market index is closely watched industry metric that gauges the outlook for home sales, declined to a value of 33 in November on a 100-point scale. Its lowest level in a decade, save for the dystopian month of the pandemic. Anything under 50 spells trouble for the industry. So again, what we got here is people basically saying, yeah, we've got other problems. Housing is officially in a recession. So there you go, guys. Hey, if you want to figure out what's going on in your backyard, your neck of the woods, go to gethousingdata.com. That's gethousingdata.com. That's my affiliate link with foreclosure.com. You can check out all the things I talk about, all the pre-foreclosures, the foreclosure sales, shadow inventory, tax liens, stuff like that that's going on in your neck of the woods, your zip code, your area. So you can validate and verify what I'm talking about. You can see that the housing market is correcting. It'll be crashing pretty soon. So once again, guys, if you want to reach out to me, got a lot of things on the go. Love to talk to you about whatever you need to talk about and working forward in real estate. Once again, I appreciate the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. I look forward to speaking with you in a couple of days. Take care.